Once you have that in place, we have our key level. And so we're trading inside of the previous day's POC, or well, the POC is up here, the previous day's high volume area, which is the top 70%. So from here, when we go down to a lower time frame, we're looking for the classic model, break and retest. Now, there's two things that can happen from here, right? You could argue there's two things that can happen. So from a 5-minute perspective, the previous day's POC is all the way up here. So this is the previous day POC. Now, this is one scenario that can happen, right? This is one scenario. So if we get a break to the upside, then a logical trade would be to target the previous day's POC, which is up here. Now, if we break below this zone, our next level would be here, the next key level down here. So the question is, how do you know whether to take a bullish or a bearish setup? So what gives you the confirmation over here once the market opens, right? So once the market opens, the only thing that gives you true confirmation is a break and retest with order flow. So this is where the delta comes in. So we've gone through volume. We're now looking at delta. So the basic premises, or the way you want to think about this is a key level in high volume. This is a key level in high volume. So once you have a key level that's in an area of high volume, so the previous day's top 70%, so just breaking that down one more time, we are inside of that red region over here. The red region is where 70% of the orders for the previous day were transacted, right? Notice how we've hit a POC from one of the previous days as well, pretty accurately to the T. So we know that we're trading in areas where the market's interested in trading. So we have volume on our side. That's not enough. So when you go down to a lower time frame, what you're looking for is some kind of order flow data to confirm whether you want to take a bullish trade or a bearish trade, right? So the first thing is key level, you need high volume. The next thing is, once you get into a key level, you're looking for a break and retest. And so the break and retest, you can only confirm whether your break and retest is bullish or bearish with the delta. And so we're going to be breaking that down. So it's basically delta, and we're looking for lack of follow through. So I've made a lot of videos about this. This video is going to be similar, where I'm going to be breaking down how to use fair value gaps with the delta. And so just as a heads up, this is basically a schematic of how it forms. So let's say we have any kind of key level. So this can be an order block, a breaker block, an ICT, support, resistance, whatever you want to call it. When we come into our zone like this, right, we can either break to the upside like this, or we can shoot right through, break to the downside, and then retest our level to take a short. So those are the only two options once we come into our key level.